Welcome to SALTovation. The SALTovation Show is a podcast series featuring the leading voices in SALT, where we talk about the issues and strategies to help you make sense of state and local tax.
We have similar issues, on the sales tax side, right? Where our states, all tax things a little differently, right?
Right.
So state of Colorado, where Meredith and I sit, may not tax software, but our neighbors in Utah might, right? And so it's a similar situation, right? Where you have to also have similar conversations with clients about, okay, these are your facts. This is the law applied to your facts. What do you want to do about it?
Right. And then you have to take them at the hand and say, okay, now let's first question, what do you want to do? These are the facts. Let's go to the right side or to the left side. Yeah, let's say yes, let's say no, because it will be difficult for them to decide. So you have to take their hand and guide them through.
Yep, exactly. So it's a similar, we operate very similarly.
Mm-hmm. Right. Are there any particular European jurisdictions that tend to be trendsetters or kind of will try to do something first from either maybe like a tax perspective or just a regime that they'll try it and then the other kind of countries will see how that plays out or take kind of some notes from that? Like, for example, in the U.S., we often look at like our larger states, like a Texas, a California, New York, Illinois, Florida, kind of see what they're doing. Mm-hmm. And then, if bigger companies are going to be there, they're going to litigate and then see what kind of comes out of the litigation to see if we can actually do that. Right. Are there European countries that are kind of a first?
It's an interesting question. Well, from a system, I don't know the US system, but in Europe we have the VAT Directive. The VAT Directive, as the name already says, it's a guideline for all the for the EU countries, currently 27. So they have to implement the directive into local law. They have to follow the regulations in the directive. But sometimes the directive is a little bit imprecise, and then they can be, in the local legislation, they can be a little bit more precise. But they always have to follow the guideline. Typical example is that the directive says, okay, the lowest VAT rate does not have to be lower than 15%. Everything above is possible, but not below 15%. That's the reason why now we have Luxembourg with 17% as the lowest one, and Hungary with 27% of VAT. So there are 10% digits in between. And then, every country can have, anything not lower than 15%. On an invoice, there are some precise guidelines in the directive how an invoice has to look like, but you can put more, not less. You can put more requirements than actually the directive says. So, for example, in Poland, there are much more requirements than, let's say, in Germany or in France. And that makes everything, every country has to follow the directive, but can be more strict, but not less strict. And now saying, okay, is there one country that is in a lead? I don't think so. We have the directive, and then we have the European Court of Justice. The European Court of Justice is very similar to the US. It's some kind of case law. It's very similar to case law system. Everything. Well, we have the directive, but we also have the cases decided by the European Court of Justice. And depending on what the court is deciding against which country, all the countries have to follow not only the directive, but also the Court of Justice. So from a material perspective, I don't think so that you can say that there's one country that is leading. Now we have an issue with e-invoices, for example, because the aim of the European Commission is to have a common e-invoicing system for the whole European Union to make trade a little bit easier. However, a couple of countries started already with e-invoicing systems with their own ones. And now, of course, if they say, well, why should we change or amend our e-invoicing system that is working to the one that is the European Commission saying, when we invested millions and millions of euros to set up our own e-invoicing system. And here we can say, yes, Poland was pushing the e-invoicing and is very strong in this. The same as Spain or Italy, they have their own e-invoicing systems. And they are pushing that actually the European Commission is now not setting up a European mandatory e-invoicing system as per tomorrow. Now, this has been postponed now and postponed and postponed. I think it's very difficult to set up an e-invoicing system, obviously. There are many countries working on it and many countries are postponing on this. But these countries, they have it already. They try to push it as back as possible. And now I think the latest deadline set by the European Commission is 2035 to have a common European-wide e-invoicing system. So another 11 years or 10 and a half years. But again, everything is so, I don't know if they will ever be able to manage it. But of course, it would facilitate trade in the European Union. And now you have to think, you have several registrations, VAT registrations in the countries with different e-invoicing systems. So you have to follow the e-invoicing systems. Worst case scenario of in the future, 27 different e-invoicing systems. What is ridiculous, because where's the common trade? We'll see. We'll see. I don't think so that there's one specific country I can mention that is really pushing the legislation to forward or evaluate or the validation evaluation of the current system what we have now.
Well, it's interesting if by 2035 there's kind of like a streamlined, unified e-invoice system. It's like, what's technology going to look like in 11 years? Like, just trying to think through what is that going to be?
How did technology look like 11 years ago?
Exactly. It certainly didn't look like the platform that we're talking on right now.
No.
Right. And things are changing every second, right?
Yes. Yes.
So I wanted to circle back on the VAT directive, if you don't mind. So, we have different kind of quasi-governmental bodies here in the U.S. that set up, kind of rules that states can decide to follow if they so desire. So what governing bodies, do they come together in the EU to make up these VAT directives, or how does that work?
Well, we have the European Commission that is suggesting any new legislation. Only the European Commission can suggest new legislation. Then we have the European Parliament that is involved in the process. Without the European Parliament, no new legislation is possible. And then we have I think the English word is European Council. The European Council is made out of the ministers of the Ministry of Taxation or financial service, taxation, I would say, or foreign affairs. So we have different European councils. For VAT perspective, so the ministry or the council for, I guess, taxation, financial body or something like this, they have to find a solution together with the European Parliament on the suggested new legislation of the European Commission. And if they don't find compromise, then they have a certain period of time. If they don't find a compromise, then the suggested legislation by the European Commission is being thrown away, and they have to set up a new suggestion. That's how it is working. This takes some time, of course. There are lobbyists all over the place, of course, and they would like to have this specific legislation into the directive or this specific legislation. I think this is everywhere exactly the same. But I think what is really interesting is that these two bodies, they have to find a compromise. Very often they find some, but if you ask me for my opinion, I think that this European Council is way too strong. I don't want that actually the ministers of the countries are involved in the whole process. The European Parliament is elected by the European people for 5 years, and I think it's a little bit schizophrenic to have in this whole process the European Council and the European ministers, or the local ministers of the countries involved in this whole process. But this is how the European Union is set up. We cannot change it that fast. And so every minister, of course, is fighting for their own clients in their country. And on the contrary, the European Parliament is rather really a pan-European parliament. They try to find a solution for the European Union, and are not so much looking for the support or what they actually have to report to the people they have been voted for. They have to defend whatever they decide to the European people, and not to politics, to the clientele in the countries.
Yeah, it stays at
So it's a long process. It's a very long process. It's a very complicated process.
Right. And it's not really that different from how states operate, to be honest, right? Because a lot of our states have, there's lobbyists, there's certain states that, lobbyists have been successful where there's certain exemptions maybe that apply, favorable taxation, et cetera. And
right.
They all have their administrative process in order to even pass laws. So it's not that much different, to be honest.
Well, I think it's everywhere.
Yeah, it takes, and it all takes time.
That is true. Sometimes too long.
Indeed. And then and we also have our federal government that really kind of oversees, right? But doesn't dabble in tax too often, right? Because the states are sovereign.
Yeah, that's true.
But there are some federal laws out there that the states, have to follow, and even those are subject to interpretation at the state level.
That's true.
So not that much different than how the states operate, to be honest.
Right, and then we have the Court of Justice somewhere flying around. So if one country is not applying, then the European Commission can start a lawsuit against the country.
Well, and that might be a good segue kind of into kind of the next kind of question is, how do VAT audits work? Are they do companies get audited for or kind of checked on their VAT compliance? And who does that? Is it local country? Is it the directive, or a group within the directive? How does kind of the government make sure that businesses are compliant with their VAT obligations?
This is always in the competence of the countries. So this is very clear. So when you have a registration, or when you have a company in a country, then it's the local tax authority that is auditing you. In Switzerland, what is amazing, the tax authorities, they really trust the companies. They trust the companies that they are doing everything correct. They are understaffed. They will not be able to audit all the companies within a year or within as well. It takes years. Well, there are bigger companies and there are smaller companies. On the one hand side, there are companies that are red flagged probably, or some that are not red flagged. If you have a refund, then you usually automatically get a phone call or an email, please explain. And when the answer is understandable, is plausible, then they trust you. In other countries, it's not like this. And for example, in Germany, you are audited on a regular basis. In Italy, you have the system where everything is audited when you file the VAT filing. So every country does it a little bit different. And but I love Italy. Italian language is the most beautiful language in the world. But dealing with Italian tax authorities can be really cumbersome and time-consuming. But that's how it is working. And the further you go to the east, the more difficult it will get. So I remember times when all the new companies' headquarters were set up in Poland, in the Czech Republic, in Slovakia, in Romania, in Bulgaria, because of the cheap labor work. But then they found out, well, to deal with tax authorities is really difficult. They don't speak any English. They speak Polish. They speak Hungarian, Czech, Romanian, and Bulgarian. Nothing else. So there will be additional costs in case of tax questions. And many of these companies that were really excited to set up a company at Central and Eastern Europe, they left again because it's getting too complicated and too bureaucratic. So this is probably going to change now again. But it's always, well, times are changing. But again, I think the key question was who is in charge of this? It's always the local tax authority. You have to deal with the local tax authority. You have to, the local tax authority has the rights that all the documents, all the papers are in the country within a certain period of time. And now, depending on the country, does it have to be immediately there, or can we wait 2 months until it is there? Again, country per country, it's different.
Yeah, and not too dissimilar, right? There are some states that we know that are easier to deal with than others. And even here in Colorado, more than 65 of our cities have the authority to do what they want separate and apart from the state. And we find that some jurisdictions are, easier to deal with than others. And a lot of that,
Right.
similarly, right, has to do with staffing. One of the smaller mountain towns doesn't have, the 40, 50 person audit staff that the city and county of Denver has. Right. So they're, kind of doing the best that they can with the resources that they have. And, sometimes picking on larger companies, because they know that the materiality is going to be there. Joe's souvenir shop in a mountain town isn't going to have quite the obligations as, a larger, conglomerate like Walmart or something. So it's very just every kind of question can just kind of identifies the similarities that, the VAT system in Europe that we've kind of been focusing on has with our US indirect tax system. And so, yes, very, very interesting. And I also, it's interesting when you say that Switzerland kind of has the kind of trust of, yeah, well, we kind of think that you're doing it right. The presumption is that you're doing it right, where, we come in, while in our court of law, you have you're innocent until proven guilty under audits.
Mm-hmm.
You are wrong unless you prove us otherwise. And so just hearing kind of that different approach is just, it's just really interesting, especially kind of just tying it to maybe individual perceptions of how countries might operate, right? Or kind of like a stereotypical, it's like, oh, maybe as an American, oh, maybe that makes sense that Switzerland is like, yeah, you're probably good. I trust you.
Doing now also accompanying audits now for almost 20 years here in Switzerland, working with the tax authorities is really nice. They don't want anything mean. I always have the impression, well, it's not easy for them to enter to a company and say, okay, please provide me with all the papers you have. They try to find a solution. They try to find, if something went wrong, okay, well, we have to fix it. But they always, what I really like here in Switzerland is they talk about their clients. The tax authority is talking about their clients when they talk about the companies they have to audit. And it's really a client. It's a client system, and they don't want to act mean. They don't want to be mean. They would like that everything is done correctly, of course. And if there are incorrect bookings or incorrect declarations, of course, they have to be corrected, and late payment interest are going to be charged. But they also would like to ensure that going forward it will be done correctly. It's not the presumption that, well, everybody is mean. Everybody would like to avoid taxes, and therefore we are going to find something. It's not this behavior. While in other countries, it seems to be sometimes that auditors come with this approach and with this manner to companies, say, okay, now we are going to find something.
Yeah, it sounds in Switzerland that it's more of a collaborative approach, right?
Yes,
like I like
absolutely.
Saying, like when you mentioned that the government looks at taxpayers as their clients.
Yeah, it's really nice.
Yes, it's nice. But it's a different approach than, another country and or state that would say, those are taxpayers. They owe us money.
Yes,
So it's a different relationship when you say, these are our
indeed.
clients.
Yeah. No, it is. They even pick up the phone. So if you have a question, you can call them. What is really nice.
Yes. Some of our jurisdictions here in the U.S. they pick up the phone more often than others as well. So we're
Okay.
familiar with that. But for the most part, not to say there's an adversarial relationship just going in, but I would say that, a lot of our jurisdictions here in the U.S., they're taxpayers. They owe the money. And that's really kind of where that relationship ends.
Yeah, okay.
It's not very collaborative all the time.
No, okay. No, we are lucky here. Honestly speaking, we are lucky here how it is working in Switzerland and also in the European Union. It's not everywhere the same.
Yep. Fair.
Yeah.
Well, and Florian, as we kind of wrap up, we often like to kind of look towards the future. You talked about one shift coming for European VAT in 2025, but do you see any other emerging trends or see anything that you think might be on the horizon from a
Um,
tax
from a tax,
perspective?
I think the biggest change in Europe is this make the system electronically applicable until 2035. And I think there's a lot coming up to companies that the tax authorities would like to have that the companies are doing, like the e-invoicing, like the standard audit file, for example, what many countries have already, that there's a specific audit file that is everywhere exactly the same in the European Union for 27 countries to have this kind of audit file or standard system, standard file. I think this electronization is still probably a challenge for the governmental bodies, but sooner or later we have to deal with it and we have to familiarize with it as tax consultants, but also convince the companies, okay, you have to follow these regulations. Now, another example also here in Switzerland, while in the European Union, you were able to file electronically VAT returns now for many, many years. Switzerland was one of the last countries, and now I think I received the information that as per 1st of January 2025, hard copy where you actually have to fill the numbers with a typing machine and sign it. This will not be possible anymore as per 1st of January 2025. I think this is way too long. Switzerland is with this regard, is too slow. But we are going in this direction. What I want to say is I think we are going in this world of digitalization, commuting with the tax authorities. In many countries, it is already, I think it is in Hungary, where when invoices are being issued and to the customer, it will be first issued to the tax authorities before it goes to the customer. So the tax authorities knows, okay, what is being sold. So the tax authorities has all this information, and audits will be much easier, number one, but also Big Brother, of course, is watching you. I think you have to, there's a lot you have to be aware of. So I think this is key to be aware of for all the companies going forward. Whenever you have a VAT registration in the country, you have to be aware of that there are major changes going on within the next 10 years from a digital perspective. And I think, I'm sure it will be very similar to the US.
Let's hope not. That real time transaction going to
Yeah, I mean,
government.
that part, I think some of our your listeners might be surprised by, right? And I mean, again, like to your point, right? It takes takes some of the work out of it for an
Mm-hmm.
audit. However, the big brother looking at you is
Absolutely.
that is an obvious concern, I think, for some taxpayers. So
Definitely. but also from a consulting perspective, an audit always takes a lot of time and a lot of money.
Yes,
Costs a lot of money. You as a tax consultant, you have to follow this audit. This audit can take 1 day, can take 2 days, can take a week,
years.
can take years, and the bill will rise and rise and rise. So with this system, of course, it will facilitate life of the companies also, because this presence of the consultants will not be that eminent anymore as it is currently. So there are positive effects and there are negative side effects. Well, when the sun is shining, there's always shadow, of course. Well, we had this I think, if I'm not totally mistaken, this use and enjoyment, I say now, use and enjoyment regulation from a VAT perspective, where actually a service is used and not where the recipient is, where a service is used, there it has to be taxed. I think we have a very similar approach now also in the US, that actually services are taxed where they're used and not where the recipient is. So I think US is probably looking at Europe, how this is moving on, and then probably taking the decisions that are necessary to be taken.
The US will never admit that, but maybe. Well, Florian, thank you so much for your time. And this was a really enlightening conversation. And so hopefully, our listeners kind of gain more context. Certainly I have, just from understanding, and kind of like I said at the beginning, we have some clients to send your way. And I think now we have more to probably send your way. So, bringing it full circle back to that people business, we're really, fortunate to have you within our people network, and really look forward to building that relationship and, continuing to kind of partner with you and kind of, just stay in touch and keep our clients and our companies compliant as possible, as whatever that looks like. So thank you again for your time.
No, thank you so much. It was a lot of fun. It was, I think it was great. It was a great idea to set up something like this. It was a lot of fun for me, and it's always, when you speak to the people and explain things, sometimes you realize how complex this may be. And I think probably VAT is also, for you as ears, is very complex and not really understandable. But the more we talk about it, the better it is probably understood. And no, thank you very much for the invite and for the opportunity.
Yes, absolutely. And until next time, this is SALTovation. This podcast is for educational purposes only and is not intended, nor should it be relied upon as legal, tax, accounting, or investment advice. You should consult with a competent professional to discuss specifics of your situation and the applicability of the information presented.